Welcome, everyone. Good afternoon. I'm Ben Gonzalez with TDI's Communications Office, and thanks for joining us today for our webinar on title insurance and the agent's oversight responsibilities. So today, the discussion is going to tell you about what's required for title insurance underwriters to oversee title agents and direct operations. We're going to have a short presentation first to give you that overview, and then right after that, we'll open the floor for your questions during a live Q&A. One quick note, there's no CE credit for today's webinar. We're only going to be taking up about half an hour of your time. All right, let's get started with the presentation, and I'll see you back here in a few minutes.
Good afternoon. I'm Jamie Walker, the Deputy Commissioner for the Financial Regulation Division at the Texas Department of Insurance. Thank you for joining today's title insurance webinar. When compared to other lines of business, title insurance companies have unique responsibilities in Texas related to the oversight of the title agents that they appoint. Today's webinar will discuss these responsibilities, which involve submitting information to TDI, the duty to report fraud, and obligations that may arise when a title agent ceases operations. The first topic we will discuss is the submitting of information to TDI. There are 4 separate types of information that I will cover. First will be the filing required by the Basic Manual Procedural Rule P31. The second will be agent appointment filings. The third is the filing required by Basic Manual Administrative Rule S4. And the last will be the reporting of unused policy forms audits. While not directly related to the oversight of title agents, I'm starting with the requirement related to issuing policies. Procedural Rule P31 addresses the authorized execution of directly issued policies. These are policies that are issued directly by a title insurance company in certain circumstances when a policy cannot be issued by a title agent or a direct operation. P31 requires that each title insurance company must file in January of each year a list containing the designated office addresses and the name and position of each employee authorized to countersign directly issued policies at each office. For ease of filing, the list may be emailed to Title Examinations mailbox at titleexaminations@tdi.texas.gov. Before an agent may act on behalf of a title insurance company in any county, they must be appointed in that county. For a title insurance company to appoint a title agent, the Form FINT-10, which is titled Title Insurance Agent or Direct Operation Appointment, must be completed and submitted to TDI. After the initial appointment, title insurance companies can add or delete authorized counties by submitting another FINT-10 form. Appointments are perpetual until terminated. Appointments terminate when a title insurance company submits the FINT-10 to end the appointment. When submitting the form, the title insurance company must disclose if the action is being taken for cause, such as misrepresentation or misappropriation. Insurance Code Section 2651-253 requires title insurance companies to conduct audits of unused paper forms in the possession of each agent. The purpose of the audits are to determine that all used forms have been reported to the title insurance company. This is critical in determining the exposure of the title insurance company, as well as to make sure that they have received all premium associated with policies that have been issued and that the company is bound to. Each title insurance company must complete an audit at least once every 2 years of each of their agents. A report of each audit must be filed with TDI. For ease of filing, those reports may be sent to Title Examinations at tdi.texas.gov. So an underwriter may provide information to TDI about a financial matter that would reasonably call into question the solvency of an appointed title agent. Some examples of these types of matters may include the results of audits of the title insurance company conducted under Insurance Code Section 2651-251, insufficient cash flows noted for the title agent, delinquent remittances of premium amounts to the title insurance companies, or title agent defalcations and escrow shortages that are noted. This information is not subject to the Public Information Act. However, TDI is authorized to share the information with other title insurance companies that have appointed or are considering appointing the title agent. Insurance Code Section 2651-011B requires that title insurance companies annually provide to TDI a list of officers authorized to provide information on financial matters. This information must be provided each January using Form TS4, which is titled the Annual Report of Title Companies Officers Authorized to Provide Information on Agent Financial Matters. As with the other filings, for ease of filing, the form may be sent to titleexaminations@tdi.texas.gov. The presentation also provides a link to Administrative Rule S4. The final type of information that is due to TDI involves the reporting of suspected fraud activities. Under Insurance Code Section 701-051, title insurance companies have a duty to report to TDI if it has a reasonable suspicion that fraud has or is about to be committed. In the title agent space, fraudulent activities may include misuse of escrow funds in the possession of the title agent. If these types of activities are reasonably suspected, the title insurance company is required to make a report within 30 days. The presentation also contains a link to the TDI webpage discussing the reporting of fraud, and there is an automated form that is available for that activity. So before we move into the topic of title agents ceasing operations, I did want to highlight the interconnectivity of the information that I've previously provided. So while companies are not compelled to report to TDI financial matters related to title agents, that's simply an authority, not a requirement. The requirement for notice in the terminating of an appointment, as well as the requirement to report fraud, should lead title insurance companies to consistent reporting and notices to TDI. For example, if a fraud report has been made, TDI expects a consistent notation of the reason for that termination when you get the appointment information being filed. For example, the appointment should not be terminated without noting misappropriation or misrepresentation, while there's a companion fraud report related to the reasons for the termination of the title agent. It is in no one's best interest, the departments, title insurance companies, other title agents, or most importantly, the public's interest, for a title agent to leave the market in an accelerated manner when information regarding their solvency and ability to operate has been known to market participants. So let's spend a bit of time now talking about title agents ceasing operations. Administrative Rules D1 provides the requirements for title agents ceasing operations. If a title agent does not complete and submit the audit and accounting that's required, it is the responsibility of the title insurance companies to use their best efforts to complete the audit and accounting for their appointed title agents. If a title insurance company fails to receive the final audit within 90 days of notice from the title agent that they're exiting the market, the company must report that to TDI within 10 days and then use its best efforts to complete the final audit and accounting within 60 days of when they should have received the audit report. To facilitate a title agent ceasing operations in a routine manner, each title agent must prepare a wind-down plan to be implemented by the title insurance companies if the title agent fails to wind down its own operations. This wind-down plan must be provided to TDI and each title insurance company who has appointed the agent. And the plan must be implemented by the title insurance company immediately when it receives notice from TDI that the title agent has failed to wind down its operations. So the requirements of D1 ensure that consumers are protected by a thoughtful, methodical approach to winding down a title agent if it ceases its operations without completing all of the steps. So to walk through some of those steps, we lay it out on the next couple of slides. So the steps that a title insurance company must take in a wind down of a title agent includes the following: canceling the title agent appointment if it has not already done so. Coordinate with the appointed title insurance companies to take possession of all of their guarantee files. We have seen in the past that for companies or agents that failed to wind down their own operations in an orderly manner, there is typically one title insurance company with an existing appointment. In this step, that title insurance company coordinates with all of the other title insurance companies that have used this title agent to make sure that each company is taking possession of their own guarantee files in the possession of the title agent. The title insurance company that is stepping in to wind down the title agent also needs to revoke electronic access to all title insurance forms. They need to take possession of all escrow funds and escrow accounts from the title agent. Ensure that the three-way reconciliations are completed. Issue any pending title insurance policies. Contact consumers or real estate agents with open files to release funds or transfer the funds to another title agent. That is critical in ensuring that the transactions pending with the title agent are not delayed due to the non-orderly wind down of the title agent. They also need to, as they are doing the three-way reconciliations, identify and research any shortages noted in the escrow funds. The next step, if there are any shortages, would be to determine who is responsible for covering them. The statute provides a clear definition for a covered claim against the guarantee fund. So that should be considered in the process of evaluating who would be covering the shortages. And if the title insurance company concludes in their belief that it would be a covered claim, the title insurance company should contact TDI. Ensure that all unclaimed monies are appropriately escheated to the comptroller. Once again, that could be delayed by a bit because of the escheatment process, but that would be needed overall to wind down the operations. And then obtain copies of all bonds, review and verify surety bond coverage. Generally, during this process, it is best practice to maintain clear and transparent communications with TDI and how the process is going. We are very interested in ensuring that a title agent leaving the market is not causing undue disruption to real estate transactions for which they were the title agent. So we're very concerned in ensuring that there is not a slowdown in this process if it can be avoided. The title insurance company also needs to make an announcement of the closure of the title agent in a local publication. They also need to conduct and pay for a final audit of escrow funds, if applicable. As indicated, one of the triggering elements for a title insurance company stepping in to wind down a company is for the final accounting and audit to not be completed. So this is normally one of our activities of ceasing operations that triggers the need for intervention by a title insurance company. And then last on this list, but certainly not the least significant, is to ensure that any necessary fraud referrals are made to the TDI fraud unit. In wrapping up, we wanted to make sure that you had good contact information for the Department of Insurance. So there is the title examinations function, which reports to me in the Financial Regulation Division. While there are certainly employees that many of you know and can reach out to, the general mailbox and the easiest and most consistent way to communicate with us would be title examinations at tdi.texas.gov. The phone number that can be used if you have any questions related to this topic is 512-676-6800. Title licensing is actually in our customer operations division, so they have a separate contact information related to title licensing questions. Their general mailbox is TDI-title licensing at tdi.texas.gov. They can answer any questions related to licensing or appointments of title agents and escrow officers. And then the phone number for them is 512-676-6500, option 2. And then finally, we've got the contact information for our fraud area. The general email that you can contact them regarding fraud reports is fraudreport@tdi.texas.gov. And you can either reach them at a 188 number, so 888-327-8818, or 512-676-6285.
All right, welcome back. Now we're going to have our Q&A portion of the webinar. Panelists, if you'll please turn on your cameras and mics now. And joining us to take your questions is our presenter, Jamie Walker, Deputy Commissioner of TDI's Financial Regulations Division, and Arturo Bustamante, Director of Title Examinations for the Financial Reg Division. Before we get going, just a couple of ground rules to pass along. Any questions about a specific company or situation, we're not going to answer in this kind of an open forum, but you can email us those questions to titleexaminations@tdi.texas.gov. All right, Jamie and Arturo, let's see what kind of questions we have. First up, when an agent is going out of business, then they're appointed with multiple title insurers, who's responsible for divvying up the escrow funds amongst those title insurers?
So the administrative rule D1 states that escrow accounts should be transferred to the appropriate title insurers. TDI doesn't have a preference for which insurer is sort of taking on that responsibility, only that the requirement itself is met, and that our expectation would be that the title insurers would be working amongst themselves together in order to wind it down.
Okay, so communication is the key there. Is there a way for TDI to alert an agent's underwriter of audit issues like, say, an account shortage or missing escrow funds before TDI takes official action? Is there a mechanism for that notice?
So currently, when a shortage occurs, either a title agent or an underwriter is required to report that shortage to TDI under internal control number 22. As part of that process, when we get a notification of that nature, we'll ask sort of the nature and scope to get a better understanding of what the shortage is, and also talk with the underwriter or the title agent about the ability to reimburse and make the escrow fund whole. So that's sort of step one in what we're doing. And as the presentation laid out, sort of the sharing financial matters is confidential whenever we do receive that information sort of among the underwriters which have this title agent appointed. So that would be a mechanism that we could use for that, as long as individuals are actually communicating with us around the financial matters that are coming up. And that's another sort of reminder to make sure that the underwriters are annually submitting their TS4 notices to us every January, so that we make sure we've got updated information to be able to have contacts at the underwriters whenever there are issues that come up with a title agent. And then finally, the last piece I'll throw in is, if a title agent is placed into supervision under Chapter 441 of the Insurance Code, TDI is required to inform the title insurers that have active appointments with that title agent that a supervisor has been appointed. So that would be another sort of method of communication from us related to a potential stressed or problem title agent that's operating in the market.
Okay, so there's a couple of different ways of communicating that. Next question up here. Does Administrative Rule D1 apply when a title agent has misappropriated funds from an escrow account or even multiple accounts?
So Administrative Rule D1 applies when a title agent is ceasing operations, whether that is through a license surrender, forfeiture, or revocation. And the triggering of that rule is not affected by whether or not there are escrow shortages. If there are escrow shortages, the title agent, as I mentioned before, has a duty to report the suspected defalcation or misappropriation of escrow funds under internal control number 22. And once again, we'll follow the same process of doing some due diligence around the scope and issues that are being noted with the escrow funds to determine sort of next steps that we need to take. So it's the applicability of D1 is not affected by whether or not there are escrow shortages in the title agent accounts.
Okay. I'm seeing several questions asking if the slides are going to be available. Yeah, we'll be emailing those out later. You'll probably get those next week. Here's another question. Is a title insurer required to accept the transfer of an escrow account when the escrow funds have been misused, or you know that there's going to be a shortage?
So internal control number 17 requires that a title agent reimburse an escrow account for shortages, whether sort of defalcations or misappropriations, within 45 days. So if an agent cannot reimburse the funds within those 45 days and Administrative Rule D1 is triggered, then D1 requires the agent or direct operation must transfer the escrow accounts and investment accounts, which still have funds in them, to the title insurers for the benefit of the parties in pending transactions. So it is an obligation of the title agent to transfer those funds to the underwriter, and then for the underwriter to wind the company down if they cannot reimburse the funds and D1 is triggered.
Okay, so that's all contemplated there. Here's another question. When does the clock start ticking on the 90 days that an agent has to perform their own wind down for ceasing operations? What is considered the point of surrender of license?
So I will take a stab at that, and then I will pass it to Arturo for a cleanup if I get it wrong. So the start of the clock comes whenever the notice is provided to the title licensing area, which we provided the contact for in the presentation. That notice is what sort of sets the trigger off for the 90 days. Arturo, do you have anything else you'd like to add?
That is correct. When the title agent submits the TI 100, that's what triggers the 90-day wind down plan. That is perfect. Yes.
Good. You got an A+ there from Arturo. Here's another question. Is there a place on the TDI website where you can see a list of all the title agents who've ceased operations and their licenses have been canceled?
That is one I definitely need to pass to Arturo to handle. Arturo, do you know if that information is available on the website?
It is available, but I'm not an expert at it because you would have to go to title licensing for that, but it is under CERCON. And you can go to our website, and there is a link that you can see the active agents per county, and it'll show you all that. It'll show you all that information. So yes.
So what about the ones that are in the process of winding down, though? Can you see it's only sort of the active or inactive?
It's only the active. Yes, ma'am. It's only the active or inactive. The only ones that can see that are winding down would be someone within TDI. We're able to tell that because it's flagged. We title licensing will flag it for us, and they'll let us know this one's winding down, so it's only within TDI that we know that information.
Okay, we've only got a couple more minutes. I'm going to try to hit 2 more. If an owner doesn't do the wind down process properly and goes back into business again, is there another list where we could reference so considerations can be made at the underwriting level?
So we do try do as much due diligence as we can related to those who have been in the market and perhaps left without meeting all of their obligations. Whenever there is another sort of licensing application that comes through related to that, the title licensing area will also review to see if there are any disciplinary actions that have occurred related to the primary responsible party for the title agent whenever they're coming in. So we do our best to monitor that sort of going forward. And I think there would definitely be an opportunity if there's an underwriter who is trying to do due diligence on a title agent and would like to submit an open records request to see if there are any disciplinary actions that have occurred related to that person. That would definitely be something that could be done, because any completed investigations or disciplinary actions that have been taken would be open to the public at that point.
Okay, and we know there is a link to our requesting of public documents on the homepage of our website at the very bottom of there. I'm afraid we're going to have to wrap it up now. I know there's still a handful of outstanding questions, but we are out of time. If we didn't get to your question, or you think of something else later that you'd like us to address, go ahead and send it to the email that we've been talking about, titleexaminations@tdi.texas.gov. Title examinations, all one word. And we'll try to get you an answer. That's it for today. Thanks for joining us. Have a great rest of your day, and we'll see you at the next TDI InsureEd webinar.